Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. On this video, we will do our weekly portfolio update. We do these every Sunday morning. Typically, these come out a little earlier in the day, but I'm a little behind, so I'm pushing this out a little later on Sunday, but nonetheless, we're going to cover the $1,570 we added in new capital and the positions that we added to with those funds. And we did reallocate $10,350 in the portfolio from the BABA reassignment, as well as selling the last few shares of those that we own, and we reallocated that across portfolio. So we'll cover that, as well as any dividends that we received for the week, options we were in. All of that will be part of the typical portfolio update that we do again every Sunday. But for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I do a dollar cost average approach, consistently investing into the portfolio on a weekly basis. That's what this portfolio update is. It's our weekly purchases. As well as, like I said, any other activity in the portfolio. I also do larger purchases when I get my bonus, typically once a year around March, early April timeframe is that time frame. If I was to do a side job, anything like that, all of those funds I'll cover as well. It is free to see what I'm doing in my portfolio, but if you would like to help out the channel, it doesn't cost you but a couple seconds of your time. It really does help out. Hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. Again, I do this portfolio update series every Sunday. I also do a stock pick of the day video series Monday through Thursday when the market's open. We take a look at the company's stock that's pulled back on the day, run it through my screener, see if it meets the criteria to make it onto my watch list. And there is the thanks button down below for those of you who are able to help out the channel. If you want to do that, it is a way to donate to the channel, and all of the funds that I receive, regardless of if it's through donations or through the YouTube advertising pay scale. I haven't received any funds yet, but I am part of that group. Once you hit 1,000 subscribers, have a certain amount of watch time, then you're allowed to monetize the channel and make some funds that way. Again, I don't have any other paid Patreon accounts or anything like that. I'm not going to set up a store, try to sell you any merchandise. Maybe in the future, whenever I have some more subscribers, if that's something you guys want. But for right now, I don't have any plans to do that. Let me know if you think that's something that you'd like to see in the future. But the thanks button down below is another way to help out the channel. But really, hitting the thumbs up, hit the subscribe button, hit the notification bell, and dropping a comment down below, as well as sharing the videos with anyone you think that might find value in the content. All right, first up, we typically cover options. It has not been a good start to the year for options. I have not really been focused on this. Pretty busy at work right now. We're doing some changes right now. They're offering some buyouts, asking for a significant amount of reworking our budgets. So right now I'm just slammed at work right now. So I've not been focused on this. I should really get back into it, or I may just cut it out for a little bit while things are crazy at work. Both my daughters are starting new sports, one in basketball, one in volleyball. So like I said, pretty hectic at the house. I've not been focused on this one right now. It's been a slow start to the year for options. It's been a good year so far for dividends, though. We did receive dividends from Comcast Corporation on January 29th, ticker CMCSA. This is out of the communications sector. And we do have the DRIP set on the portfolio, dividend reinvestment plan, which just means that anytime a company in the portfolio pays out dividends, in this case Comcast, and the $68.37 they paid us, goes right back in and buys more shares of that same company on the same day. It's automatic. I don't have anything to do with it. It just my brokerage account automatically does it. So the $68.37 picked up 1.81305 more shares of Comcast, and this 1.81305 shares added an additional $2.37 in passive income over the next calendar year. So this is the dividend snowball. You hear some people reference the dividend snowball or compounded interest, same thing. And this is really what that looks like in action, right? We've already purchased shares of Comcast. Those shares of Comcast pays us dividends. We get those dividends based on the share count. Those funds go back in and buy more shares. The new shares add new capital. And even if we weren't to add to Comcast any longer, it will continue to grow as the dividends are paid out, as they raise dividends. And then obviously if we add new capital and buy more shares, it'll increase that snowball, right? And what snowball is running down is time, right? The hill is time. All right, now this is one that I really wanted to walk through here. We have a bit of a reallocation in the portfolio. We did reallocate $10,350.92. So if you were watching the channel, you saw last week we had one options play we were in was Alibaba, ticker BABA. This is a Chinese company. I am a little concerned with the recent news of the tariffs that are coming out. That's part of the reason that I wanted to kind of look at this one and see, do I want to hold this one right now, or do I want to take the gain that I had, lock it in, and go ahead and reallocate it? So I decided to do that. So we did not run the wheel on this one. It was a little above $90 whenever the market opened on Monday, so I just went ahead and sold out the additional 16 shares, right? These 100 shares were already called away last week, so we were already sitting on this $8,899.73. So I sold the additional 16 shares and some fraction of a penny, which amounted to, or some fractions of shares, which amounted to $10,350.92 total, right? And then we reallocated that across the portfolio. I'm going to read through what we bought. I won't read the dollar amounts. You can pause this and go through it, and then I'll look at the overall passive income added or deleted there at the bottom. So with this $10,350.92, we bought 4 shares of Cisco Corporation, ticker SYY. This is out of the consumer discretionary or consumer staple sector. 4 more shares to our Schwab Strategic Dividend Growth ETF, ticker SCHD. 40 shares of Occidental Petroleum, ticker OXY, and SCHD is an ETF. I didn't mention that. We're buying this every week. Oxy is out of the energy sector, Occidental Petroleum. I've been building out this position, so it was nice to drop a large chunk on it. Got me over 100 shares, but we're going to keep on building this one out. I'd like to get to at least 200 shares. We'll see if we can get there before it jumps back up. It has pulled back below my cost basis, so I could have even got this a little cheaper if I'd have waited, but that's the nature of buying. You never know what's going to happen. So I buy whenever I reallocate and buy whenever I feel like the price is right, and then adjust from there. But 40 shares of Oxy, 17 shares added to our LyondellBasell Industries position, ticker LYB, is out of the materials sector. 4 shares added to the realty income position, ticker O, is out of the real estate sector. This is a REIT. We added 16 more shares to our Lam Research Corporation position, ticker LRCX. This is out of the information technology sector. We added 40 shares to our Kraft Heinz Company position, ticker KHC. This is out of consumer staples sector as well. We added 3 shares to our Johnson & Johnson position, ticker J&J. This is out of the healthcare sector. 53 shares we added to our Haverty Furniture Company's position, ticker HVT. This is out of the consumer discretionary sector. We added 10 shares to our CVS Health Corporation position, ticker CVS, is out of the healthcare sector. 30 shares to our Comcast Corporation. They paid us dividends, so we thought we'd treat them a little bit. This is also one I'm going to be focused on for the month of February, along with Occidental there. So 30 more shares to our ticker CMCSA position out of the communication sector. And we added 5 more shares to American Water Works, ticker AWK, is out of the utility sector. So obviously we had some loss of dividends from BABA and some additions of dividends from the new positions. All total, it actually worked out where we ended up on the positive side of this with $131.70 in passive income over the next calendar year, right? So I'm happy with the way that turned out. We didn't lose any dividend income. Actually, we gained some dividend income, and we were able to trim one position out of the portfolio, so it makes it a little easier to monitor going forward. Not that I think Alibaba is a bad company. Actually, if it was to drop back into the 70s where I was picking it up last year, I would probably add this back into the portfolio. It did run up into the 90s. I think it maybe even touched $100 throughout the week, but then dropped back, and I think it probably is going to drop back again because, again, I am concerned, and I'm sure some other people are, with what's going on with the tariffs around Mexico, Canada, and China, which is where this company was from. All right, now we get into the new capital added on the 27th, along with whenever we did all of the reallocating there. We did add $1,100.80 to the portfolio in new capital. And with those funds, we added to our Lam Research Corporation position, ticker LRCX, added 4 more shares there at $73.60. This one was one I was going to continue to add to, but it has run up into the 80s. Now, if it does drop below my cost basis at any time, I probably will nibble on this one. We added 8 shares to our Pfizer position, ticker PFE. out of the healthcare sector. Picked up those shares at $26.84. Lam Research was out of the information technology sector. And Occidental, we added 10 more shares to our ticker OXY position, or 12 more shares to our ticker OXY position at $49.31. This one pulled back into the $46 range. Again, I'm going to continue to build this one out. I'd like to get it to about 200 shares. This $1,100.80 and the new shares it picked up added $28 in passive income over the next calendar year. And we weren't done. We went back in and added an additional $469.47 in new capital on January 30th. With those funds, we picked up 6 shares of Vale, ticker VALE, out of the material sector. Picked up those 6 shares at $9.47. Added these last 2 are our weekly buys. We're going to add these regardless of whether the market's up or whether the market's down, whatever their price is. We're just going to pick up 1 share of VTI and 3 to 4 shares of SCHD, maybe even more of SCHD, depending on where the price is at. But picked up that 1 share of Vanguard's Total Stock Market ETF, ticker VTI, at $300.37. Picked up 4 shares of the Schwab Strategic Dividend Growth ETF, ticker SCHD, at $28.07, and added an additional $13.62 in passive income. Total new capital invested $1,570.27, and total passive income added with the reallocation as well as the new funds received there. We did add $173.32 in passive income over the next calendar year. All right, let's run through the sector weights. Obviously, there's been some changes with that reallocation. Communications makes up 9.74% of the portfolio. Consumer discretionary, that was the biggest change there, dropped significantly. We pulled out BABA. We may look to add something else to the consumer discretionary sector since we don't really have a big slice of pie there. It's at 1.97%. Consumer staples makes up 9.23%. Energy is at 7.75%. Financials makes up 2.84%. This is also a sliver of the pie, but SCHD is heavy in financials, so that's part of the reason I'm all right with that. But there are some that we're watching on this one as well that we may add in the future, but we'll see. Healthcare makes up 12.81%. Industrial sits at 6.99%. Technology at 14.81% of the portfolio. Materials makes up 8.57%. Utilities makes up 7.86%. REITs and real estate at 7.82%. And ETFs, eventually this will be the largest slice of the pie just by the nature of adding to VTI and SCHD every week. It currently sits at 9.59% of the portfolio. Over here to the right, you can see the same sector weight percentage breakdowns as the pie here, and then the dollar amount allocated to each. Obviously, you can see consumer discretionary went down significantly. That's just HVT now. Haverty Furniture Company's position there. We only have the one consumer discretionary position outside of the ETFs that we have. All right, this is it, and I show this every week. I think it's important for those of you who watch the channel to see a real portfolio built out over time. It's one thing to talk about investing. It's another thing to show what the person is doing. That's why I do it. A lot of people get on here and talk about investing, and you have no idea what they're investing in, what they're doing behind the scenes, or they charged you, to go to their web page or another page to see what they're doing, or you got to sign up for some weekly mailing list or whatever else they're asking you to do to try to see their portfolio. That's not what I do here. I want you to see it out in the open. You should be willing to show people what you're doing out in the open without charging them, right? If we're not financial advisors who want to get charged for this, then again, it should be free, and whatever money you make off YouTube, you make off YouTube. That's what I'm doing anyway. I think that's what other people should do too, but that's on them. But I'm going to show my portfolio every week. I want you to see a real portfolio built out over time. You can see the ups and downs of the market. You can see the ups and downs of my portfolio. You can see the mistakes I make over time, and hopefully you don't make any of the same ones. And for those of you who are on the fence thinking that you can't do it, you can't invest on your own, maybe you need to pay someone to do that. I don't agree with that. You can definitely do it. Save that money you would otherwise pay someone to invest for you. And even if it's just sticking to ETFs or index funds, something that Warren Buffett would recommend was something that tracks the S&P 500, something like VOO or SPY, or another ETF or index fund that tracks the S&P 500, and you can just set it and forget it, dump money into it, whatever your investing schedule is, weekly, monthly, quarterly, once a year when you get your taxes, whatever it is, dump your money in there and save that fee you would pay somebody. You can do it, especially with all the tools out there now, the ability to buy fractional shares, the ability to download apps and do it on your phone. Most banks now have some sort of investing arm tied to them, if not directly through the bank. So you can definitely do it on your own. And like I said, stick to index funds and ETFs at first if you need to understand or learn how to read a balance sheet, an income statement, and price out a company, right? You can learn all that while you're investing in that S&P 500 index fund, whichever one you choose. But let's keep going here. This column is all of the positions in the portfolio, total shares here. All of the numbers will be as of the close of business on Friday. Current price, market value, average share cost. This is my cost per share, right? This does include reinvested dividends. Purchase price, what I have into each position. Again, does include reinvested dividends plus money out of my own pocket. Total return, whether I'm up or down, you'll see in these next two columns. Percent return here. Green means I'm up. Red means I'm down. Sector each position falls in, quarterly, monthly, semi-annual payer, what their current dividend yield is, my yield on cost, the portfolio weighting. So what we saw on the previous slide was each sector weighting. This is each individual position's weighting. And I do have a rule in the portfolio. I don't want any one position to be more than 10% of the portfolio. I don't want any one sector to be more than 20 to 25% of the portfolio. That does not necessarily apply to ETFs. Like I said, ETFs, SCHD, and VTI, I'm going to buy every week regardless, and they may indeed someday be more than 10% of the portfolio as individual positions. Estimated annual income in this column, payout months here, dividend growth year over year, and where it sits at 15% of a 52-week low. This just ties back into my average cost per share. I want to try to keep my average cost per share below 15% of a 52-week low. It's not a hard rule. It's not written in stone. It's just a goal of the portfolio. All right, total shares, 6,679.309 shares. Market value, $330,186.47. What I have into the portfolio, $308,974.50. Again, this does include reinvested dividends. Total return, $21,211.96. I don't really focus on this. It doesn't really mean much to me, but I do track it. And I'm up 6.87%. Again, doesn't really mean much to me because the only way I get this $21,211.96 or lock in this 6.87% return is if I sell out of all the positions in the portfolio, right? I did lock in an 18% return on BABA. So some positions are up, some positions are down, and right, that did drop my overall return a little bit. Actually, if I held BABA a little bit, I'd probably be well over 7, if not 8% return because, like I said, they ran up into the $90 range. But that's the nature. I locked in that 18% gain and allocated across the portfolio, so it adjusts the numbers accordingly. But it does drop my overall share count down one. Current yield, 3.896%. My yield on cost, 4.163%. And this is what I'm focused on. That's why it's circled in red over here. All of the dividend income from the different positions in the portfolio, and it continues to go up, whether the market's up, whether the market's down, whether the market's floating sideways, as I add new capital, as positions in the portfolio increase their dividends, as they pay out dividends, and those dividends buy more shares. And it currently sits at $12,863.29. Should be over the next couple weeks, 2-3 weeks, definitely in the month of February at some time, we will bust over the $13,000 in annual dividends. So very nice to see the growth in the overall portfolio. Dividend growth here is about 6.86% year over year. That will adjust as companies in the portfolio adjust their dividends. And the most recent one, Comcast, just recently raised their dividend. So I did make that adjustment, and that's what the yellow indicates. These are the positions that have already raised their dividend for the calendar year here. Some of them even started there back in December, raising their dividends, but the payouts didn't hit till January, February. Some of them haven't hit yet, right? Which one's here? Owens Corning, we saw that one already. HPQ, I think we saw that one already. Enbridge, this one, they raised their dividend in December, but we'll see that in February. And then Comcast, they just raised their dividend, but it didn't apply to the last one, so it should apply to the next one. Valet, this may be wrong. I need to go back and look. I don't think Valet has actually raised their dividend, so that may be off. That may be just highlighted from last year. I might not have changed that. I need to look at that. Well, that is really it for this one. Let me know what you're buying in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And again, hit that subscribe button. Join us on the journey to financial freedom. Join the vested interest community. And let me know what's going on in your portfolio. A lot of ups and downs here so far for the year. Some crazy things going on with tariffs that I think are really going to impact portfolios over the next week or two, if not longer. A lot of volatility out there. Again, options plays have not been going well for me, but how are they going for you? Love to hear from you guys in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. I hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investment journey for educational and entertainment purposes. Investing involves risk. You can't lose money, so never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.